Oh, Capital Mortgage.
What's going on, guys? Sal Fowler here with FMO Media, CEO and founder. Over here with Matthew with Oak Capital Mortgage out of the awesome state of North Carolina. Matthew, nice to meet you, buddy. Why don't you just take the next 2 minutes and kind of just give us some real quick background on who you are and what Oak Capital is about.
Yeah, Ace, thanks for having me. It's a pleasure to be here. My name is Matthew Hassey. I am the broker owner of Oak Capital Mortgage. I like pina coladas and getting caught in the rain. You know, I'm the oil and the dream machine of home ownership. I believe in making dreams come true. I'm passionate about mortgages. I grew up in Durham, North Carolina. I went to school at East Carolina. Go Pirates! Found my way to the Queen City, Charlotte, North Carolina around 2005, and been loving it here ever since, and been making dreams come true.
Love it. I love the energy too, Matthew, man. I love it, man. So how'd you get into the loan and mortgage industry? You know, because no one wakes up and just like, hey, I want to write loans the rest of my life. I don't know, maybe they do, but how did it end up? Walk me through it.
You know, it was a crazy story. I was a political science major, and I mean, I had no idea that the mortgage origination business was going to be my career. And after college, I had a couple of jobs, and I said, I got to find a way to make some money. And so I was the only way to really make some money is get into some kind of financial gig. And I joined a small company that did really small loans, and a title rep came in there and was telling me about these mortgage originators that were making big bucks. And I was like, that's for me. And ended up applying at a company, and a couple months went by, and they called me and said, hey, we have an opening. We want you to come in for an interview. And really the rest is history.
Very cool. So talk to me about, maybe year one, year two, year three, because there may be some people, because most people are coming from their best year ever last year, right? Or maybe the last
Absolutely.
2 years. So there may be people diving head first right now to the current market saying, hey, that's what I'm doing. They may hear your story and say, hey, I want to be the next Matthew. What maybe advice could you give out for your first couple of years starting in the mortgage industry?
You know, the first couple of years are probably the hardest years, no matter when you're starting. So I started in 2006, and you're coming leading right up into the Great Recession. In 2006, loan products were completely different. You had stated income loans, stated assets loans, fast and easy loans, all kinds of crazy, funky loans you could do. And that led to, I mean, what they call the Great Recession, where home prices plummeted. The economy plummeted and everything. But my motto has always been last person standing wins. So no matter really the market that you're coming into, there's still going to be mortgages out there, and you just got to stay focused and work hard and put in the effort, and you're going to succeed as long as you enjoy what you're doing, and you're focused on building relationships, and you're focused on bringing in that purchase business. That's really all there is to it.
Yeah, it's true entrepreneurship, right, Matthew? I mean, you got to really hustle. I can imagine the first couple of years, whether you're on the real estate side of things, as far as a real estate broker, or the mortgage side, it's a hustle gaining those partnerships and relationships, I'm sure. What piece of advice or really, I know you don't have a crystal ball, but everybody has a different opinion on where we currently are, or where we're going, I should say, right? With the mortgage industry, right? Interest rates are going up, loans, some people are in fear, some people are still excited. Where are you at? What's your opinion with where we currently are?
Yeah, I'm excited about where we are right now with interest rates and what's going on with the housing market. I would think it's a very similar market to what we saw maybe coming out of like 2014, 2015, maybe not as much. Interest rates have gone up dramatically over the last 5 months. A lot. They've gone up a lot higher than what people were projecting. But overall, on a historical standpoint, we're still at very, very low historical interest rates. I mean, right now, 30-year fix is probably right around 5.25%, 5.5%, depending on credit score and down payment. And if you look back, these were the interest rates were as far back as like 2018, which is only about 4 years ago. So we're really not too far. It's just interest rates dipped way low, and people got spoiled, and people thought, oh, this is awesome. Good things don't last. Rates had to come up, and it's a sign that the economy is improving dramatically. And you know, with an improving economy, people are going to have better jobs. They're going to be able to afford more. And the one thing is housing inventory has been pretty low coming up into this year. And what we're seeing with the rising rates, sellers are getting the memo that, you know what, if I want to get my house, get top dollar for my house right now, now is the time to list it. So we're starting to see in a lot of the metro areas that we're in, more inventory coming on the market. And that's helping all the buyers out there be able to have a little bit more options instead of competing with 20 different buyers on the same house. Maybe they're just competing with 10 buyers. So I'm excited about the market and where it's going. And I think there's still good times to come.
Very cool, man. And what would you say? Because, you know, with the market being so nuts right now, I know a lot of people may recommend, and I mean, we're both in North Carolina. It's like, hey, you need a pre-approval letter before you don't even bother looking at a house unless you got a pre-approval from Matthew, right? Right. So what does it look like for someone that's maybe listening into this? And I don't know what the average client looks like to you, but maybe I'm a guy who has a 650 to a 680 credit score, right? I make between 50 and 70 grand. You know, I lost my job during COVID. Maybe I've only had a job for the last 12 or 18 months, you know, and I don't know if that's your typical client, but that might be the typical person listening into this. And that person comes to you, what would be like, and obviously I know there's a lot more to it because you have to check boxes. What would be the product maybe that would be a fit for that person? I know there's a lot of variables here, right? So I want to kind of get your thought process. If someone's listening in, they're like, do I call a lender right now, or do I talk to a real estate guy, or do I just not even feel like I can qualify? Do I do nothing?
Yeah,
you know?
absolutely. Yeah. So, I mean, we deal with loan amounts as low as $50,000 all the way up to $3-4 million. So we work with clients with what they have to work with. And so what we're focused on at O Capital Mortgage is putting the client in the best position to get an offer accepted on a house. So what we do is we take them a step further than a pre-approval letter. We take them and get them fully approved by an underwriter with one of our many partnerships we have with lenders. So backing it up a little bit, O Capital Mortgage, we're partnering with over 30 different national wholesale lenders. And so we're able to any given day see which lender's offering better pricing. And it's all about the client for us. So we want to put our client in the best position to get the best possible rate and have the best experience with us. So we're going to take them and we're going to get them fully approved with one of our underwriters before they even go under contract on a house. And what that does, instead of me giving you a pre-approval letter, I'm giving you a letter that says you're fully approved. You have been underwritten by a real life underwriter. And so that kind of puts you in a little bit better of a position than people that are just making offers with just pre-approval letters. We can even take it a step further than that. With multiple lenders we're approved with that we're partnered with, we can actually lock in an interest rate for you for up to 90 days before you even go under contract. So you're locked into an interest rate. You know what your interest rate is going to be. You have a letter that says, hey, I'm approved. With rates going up, with the volatility of the market, you don't have to worry about, oh, is my rate going to be higher than this? You know what your rate is. You have an approval letter. So we're putting our clients in the best position for their offers to be accepted, no matter what they're looking at. If they're looking at a $75,000 house or a $100,000 house, or they're looking at a $300,000 house, that's our focus. We're 100% client focused and focused on putting them in the best position.
Now, to dumb it down for a second too, Matthew, because I've probably had, because I'm originally from New York and I moved down to Wilmington about a year ago, right? And I've had, I don't know, probably about 15 or 16 of my friends, my mom, my brothers, like all types of people moved down here this last year.
Oh, yeah.
And a lot of people just don't know what they don't know, right? So I want to like dummy it down, like, hey, people don't, the average person at any age, because this is what I found out, right? I'm 38, right? And I realized people my age coming from New York or these big cities that are moving down south have been renting their whole life. They don't know what the lending process looks like. They don't know what the hell an FHA loan is. They don't know about the products, right? You're in the world, you talk the language every day. Can you walk me through some of the products and the details of like what it takes to qualify for certain loan products? Because people may listen to this and be like, oh shit, I qualify for that.
Yeah,
Like,
absolutely.
let me call Matthew right now, man. So can you walk me through just a couple of different products, the VA loan, just different things? I know my whole family's military. I'm ex-military myself, and a lot of people don't know, even from my friends, like, oh, I qualify for VA loan, but I didn't go overseas. Do I still qualify? They don't know these type of things, so they didn't even know they could reach out. So can you just walk us through maybe like what's a VA loan, what's the FHA, had the different levels of it? I'm saying, like, maybe walk me through each one of those, two or three of those, just so listeners can kind of listen in and say, oh wow, okay, cool. Let me call Matthew right now.
Yeah, and Ace, thank you for you and your family's service. VA loans are fantastic loan products that are really a benefit to our armed forces, people that have served in the military, and that allows for, and the reason why it's a benefit is that it allows for 100% financing, and 100% financing is really a hard product to find right now. When I say product, I mean mortgage loans. So VA loan, 100% financing. You don't have any monthly mortgage insurance. There is a funding fee based on if it's your first time use of a VA product, whether if you receive any kind of disability pay from the military, you can have that funding fee waived. But yeah, 100% financing for VA, it's a government product. Compare that to a conventional loan. If you're a first-time home buyer, you can put down as low as 3% for a first-time home buyer. The minimum is 3% down. Generally, if you're not a first-time home buyer, you're looking probably about 5% down with a conventional loan. Now with FHA, it's a government product similar to the VA loan, but you're going to need to put down about 3.5%. So there's a lot of the problem out there. A lot of people think that they have to come up with 20% down to buy a house, and that is just not true. You can buy a house with as little as 3%, 5%, 3.5% down if you don't have a VA benefit, and you're looking at very competitive interest rates and monthly payments that are probably going to be better for you than putting down 20%. What I tell my clients, it's always better to use the bank's money than your money. You want to have your money in your bank or in your brokerage account working for you when you can finance stuff with the bank's money. And interest rates have gone up, but they're still at historical lows. So the cost of financing, it makes a lot of sense to keep your money working for you or keep it in your savings account and use the bank's money to buy your house.
That's powerful. And where for as far as credit score goes, because I know that's a lot of times people think, oh, my credit score is not good enough, man. I got a 650, 640, 680. Most people think they need like a 720 and above to qualify for a house. Can you walk me through some of the accepted credit scores for some?
Yeah, absolutely. And so with us being a mortgage broker, we're approved. Again, we're partnered with over 30 different lenders. So there's an advantage to working with a mortgage broker in that we have so many avenues that we could take you down depending on your scenario. So we can go down to a 620 with most of our partners on a conventional loan, and we can go down to 580 with 3.5% down on an FHA loan. So even if you think your credit score is low, if it's 580 or above, chances are we can get you financing. And so and what we like to do with our clients, if for some reason we can't get you approved right now for a mortgage, we're going to work with you. We're not just going to say, hey, Ace, we can't help you right now, see you later. We're going to say, hey, Ace, here's the plan. Let's work with our credit repair company that we've partnered with, find out how we can get your credit fixed. Because you'd be surprised how many people out there that don't understand their credit scores and what happens with your credit reports, what's reported on your credit reports, and how that affects your scores. And we could dive into that later, but that's probably a whole nother podcast that we could do about credit reports and credit scores. But we could go down to a 580, and then we also have some lenders that will go down to a 550 with FHA loans, but you're going to have to put down a little bit more. You're going to have to come up with 10%. So we have partners across the board that are going to service at multiple different credit scores. And if for some reason we can't get you approved right now and get you in position to purchase the house now, we're going to work with our credit repair partner. We're going to give you a plan that we're going to help you put in place as far as you need to save up this amount. This is how you do it. You're going to save up $350 a pay period. And then after 3 months, you're going to have this amount that you're going to be able to put down. And you're going to do this with the credit repair company, get your score from that 580 to a 640. and you're going to get a better interest rate and be able to afford the home of your dreams.
Wow. I think it's crazy, right? Because I think just people coming from major cities don't realize that, right? It's like, wow, if I have a mid-tier credit score and I'm buying a $300,000 house down south. I'm coming from New York. I'm coming from Maryland, anywhere up north, right? Because that's where a lot of my friends are. They're all like, wait, man, 3.5%. So if I got like 10K plus closing costs, $15,000, I'm like, I'm in.
Yeah, and the houses down here compared to where they're coming from, they're buying mansions down here. They're living large. They're like, oh yeah, I can get this 4-bedroom, 3,000 square foot house for $400,000. That wouldn't buy me a shack in New York. So they're probably pumped about it. And one thing about credit scores, one thing we run into with a lot of people is that people think that they know what their credit scores are because they get their credit scores from some website or wherever. People should understand that those aren't the credit scores mortgage companies use. There's all the credit, like Credit Karma, for instance, those credit scores don't go through the same scoring models that when we pull your credit, there's scoring models that it goes to. So Credit Karma is kind of giving you more of a raw credit score where we're looking at different credit scores. So one thing, if somebody's out there listening and say, hey, Matt, how do I find out what my mortgage credit score is? You can go to myfico.com and you can pull your credit scores and you can set up, there's a service that they provide, but you don't have to sign up for the service, or you sign up, you can cancel. That's going to give you the credit scores that mortgage companies use. So I see it a lot where somebody says, hey, my Credit Karma says my credit score is at 700, and I pull it and it's at a 620. I'm like, hey, it's not. And then they get upset because they're like, no, the credit score is 700. But no, it's not. Here's what we need to do to get it up there. But that's one thing that people need to understand is the free credit scores that they receive online are not the credit scores that mortgage companies see.
100%. That's because what is it? Credit Karma uses what the Vantage scores, right? They're not pulling off FICO, right? So they're looking at the wrong, sometimes inflated numbers or like skewed numbers, right? So
yeah, and there's different scoring models too. They might be pulling off of the MyFICO 4.0, and we're using 5.3 or something like that.
Got it.
There's Vantage scores, there's FICO scores. It sounds simple, but it's not. There's lots of variables that go into credit scores.
Yeah, you got to have your college degree and credit, right?
Yeah, your doctorate like chemistry or something to figure out credit scores.
It is crazy. So so changing gears, let's talk a little about marketing, right? Obviously, we're a marketing company, we're biased. I know we're doing your marketing. Let's talk about how you've seen maybe marketing change maybe the industry, right? The mortgage industry a little bit, and kind of where you think it's going and how it's impacting the current mortgage industry today.
Yeah, I mean, if there's the only constant thing in life is change. So you look at like how things were marketed back even 10 years ago or 20 years ago. I mean, social media didn't even exist at that point in time. So where I see marketing and kind of the future of the business, real estate, mortgages, everything's going to be online for the most part. You want to have an online presence. You don't want to neglect the old school kind of shaking hands and kissing babies tactics about building relationships, but you also need to have an online presence for those Gen Z kids that see you on Instagram, want to follow you on TikTok and all that stuff. So it's kind of just a cornucopia of all of the above. You want to have strategies that build your brand online, that build your brand in the physical world, and build those relationships, because that's really what it comes down to, is that the mortgage business, the real estate business is all relationship based, relationship focused, and that's the way you sustain your business.
And now you being in Charlotte also, I just have a question. Even though I live in North Carolina, I've actually never been to Charlotte, believe it or not.
Well, you need to come on down.
I got to make my way over there. But as far as the Charlotte market goes, what are you seeing happening there that maybe you didn't see a few years ago? Is there more investors coming in? Is like BlackRock and these big companies coming out? Is it just a lot of like what's happening? Like what's the state of the market in that area?
Yeah, no. So we are seeing some more investment activities as far as from big Wall Street firms. So real estate is local, and it's hyper local in some areas. Some neighborhoods are attracting more investors. Wall Street firms that are buying in properties. But I mean, I was watching the news the other day, and they were talking about how HOAs are starting to fight back against these big Wall Street companies trying to buy up blocks of houses. HOAs are stepping up and saying, no, you can only have so many rentals and stuff. So that's kind of been a very new shift in the market, is that things are starting to get a little bit more balanced out with that. Charlotte's a highly competitive market. We're seeing, last number I heard was like 40 to 50 people moving here a day.
Wow.
Which is wild. We're seeing a lot of appreciation. And Charlotte's got a lot. There's something for everybody here as far as a neighborhood. You can live in an urban neighborhood close to the city. You can kind of go out a little bit further, and you can go into suburbia life. Neighborhoods are out there that people love living in. It's Charlotte's just made up of multiple cool neighborhoods that people like to focus in, and the trends are prices are still going up. We're seeing a little bit more inventory coming on the market, but it's a great place to be.
Yeah, I was going to ask that as far as interest rates going up a little bit, right? And maybe balancing the market out right now, and maybe it's catch up. What as far as the average person right now thinking, like, should I buy? Right? Is now right now still the time to buy, or should I wait and see what happens, right? What recommendation do you have for those people? Like what are you telling everybody?
Yeah, no, absolutely buy a house.
Mm-hmm.
As long as you are comfortable owning a home and understand that owning a home, you're going to have maintenance things. You need to have a reserve account, a 6 months reserve account to prepare for what if the AC goes out, what if your water heater goes out, stuff like that. You need to be prepared to. People that don't have a savings account or have money in reserves, when they come to us and want to buy a house, I get a little nervous, just because it's not like renting, right? Like, you're going to have issues that might come up, and I want to put people in the best position possible to afford a home and be prepared for down the road. It's a commitment, it's an investment, but
Definitely.
Buying a house, absolutely buying a house, I would recommend it, just because the appreciation you're going to see, you're right now, if you're renting, you're paying somebody else's mortgage. That money is not going back to you, where when you own a home, you have a giant savings account, which is called a house, and you're putting money into that savings account. And then one day, eventually, if you go to sell that house, hopefully if the market continues to appreciate, which is projected that it would, you're going to be able to get that money back. And it's home ownership is one of the quickest ways to build wealth, and one of the proven ways to consistently build wealth over time. And so one thing I hear out in the market is, oh my God, we're going to head towards a crash like 2008, 2009. And that's simply not the case. The reason why is that there's a true supply and demand market, where there's just really not enough supply to satisfy the demand of people wanting to buy houses. So we're not in a market that was 2008, where mortgages were done at 100% financing to people who were stating that they were a janitor and they made $200,000 a year. The regulations put in place after 2008, 2009, have really tightened up the mortgage business. Mortgages are solid. They're well underwritten. So we're not looking at any kind of a crash. We're looking more or less just a balancing of the market, and maybe we don't see a 15 to 20% appreciation year over year like we've had over the last couple of years. Maybe we see a solid little 8 or 9% appreciation, but it's a great time to buy a house. And I recommend the first thing you do is talk to a mortgage broker and get pre-approved and get approved. I'm a little biased. You can talk to O Capital Mortgage, but
if you're in Charlotte, you call O Capital. Well, that actually leads to my next question, Matthew. Where is O Capital going in the future, right? What's the next big thing for them? Where's the company going over the next 12, 24, 36 months?
Yeah, no, we're focused on growth, man. It's I believe slow and steady wins the race. So I founded the company in March of 2020 after 15, 16 years of working for other people. And the reason I founded the company is that I want to work for somewhere that puts the people that work for the company first. I'm a loan officer by heart. I want to help build other loan officers' careers and give them the support they need to continue to build their careers. I want to build a company that is focused on the client. I put myself in every client's shoes that I work with, and I want to make sure that they're having the best experience possible. I believe getting a mortgage shouldn't be a transactional experience. It shouldn't be something that is assembled along an assembly line where you're talking to multiple different people throughout the process and you're not building a relationship. I feel like it should be buying a house, getting a mortgage is one of the biggest investments you're going to make in your entire life. And you should have a wonderful experience while you're doing it, right? Yeah. So Oak Capital Mortgage is going to be focused on growing over the next couple years and bringing in like-minded individuals that want to put their clients first, want to get their clients the best possible interest rates using our over 30 different lenders we're partnered with, and really just making dreams come true.
Love it, man. So wrapping things up here, Matthew, what last minute words of advice do you have for the audience? Tips, tricks, maybe a possible someone getting in the industry right now, advice you have for them, and advice for a buyer, a seller, anybody. What piece of advice you want to leave everybody with?
You know, if somebody's out there thinking about joining the mortgage business, getting into the mortgage business, I would encourage them to do it. You would want to reach out to somebody that that can kind of give you good advice and steer you along the way. It's hard, but it's an amazingly rewarding career. When I started in the business, I had no idea that I was going to continue for 15 or 16 or 17 years or however long I continued to go. I didn't know this was going to be my career. It started as a job. So just know that if you put in the work and you treat people fairly and you treat people respectfully and you get people the best possible deal, they'll come back to you and they'll refer you their friends, family, and coworkers. As far as buyers go, we want to look at my AirPods. Get a better set of AirPods. Actually, that's probably a piece of advice I would give. Buyers, don't get burned out on putting in offers. I've talked to many buyers out there that they're putting in multiple offers and not winning their deals. Guys, you gotta stay with it. Just stay the course. Keep looking, because there's gonna be an opportunity out there that comes along that your offer does get accepted. If it's a buyer that's just starting the process, they don't know where to start, reach out to a mortgage broker. Reach out. We have 2 other mortgage brokers here that can help. I can help get pre-approved. That's the first step you want to take, because if you don't know how much you can afford, you don't know what your credit scores are, education, knowing is half the battle, right? We're going to put you in a position where you know exactly what you can afford, what the payments are going to be, what the closing costs are going to be. You're gonna have a conversation with me or one of my other mortgage brokers, and on the other side of it, you're going to be highly educated and know what needs to be done for you to be able to buy a house. Awesome.
Matthew, thank you for being on the show, buddy. If you're in Charlotte, North Carolina, but really if you're on the East Coast, because he is in several states, Matthew, reach out to him.
We're in the entire Southeast. We're in Virginia, the Carolinas, Georgia, and Florida. We love the Southeast. It's a Sun Belt, and who knows, maybe in the next year or two, we might be expanding to some more states. But anywhere in Virginia, North Carolina, South Carolina, Georgia, and Florida, we can help you make your dream of home ownership a reality.
Boom. Love it. So if you're in any of those states, please reach out to Matthew over at Oak Capital, and we will see you guys next time.